Evening traders, today's Thursday, March 30th. Would you like to know what the market's master plan really is? Finally realized it this evening. The master plan revealed is to go higher in April. It is now front and center. We are going higher in April, and we're going to be taking out those 421 gap that was left on August 19th, 2022. How do I know that? Well, what you're looking at on the screen was a tweet from 2:06 p.m. today. And as I have said in previous days, previous episodes, if you recall, I always say, let's see if this takes out the previous high, right? You guys have heard me say that before. And once again, here's the tweet. 403.49 is the magic number. 403.49. This pink line, which is the previous high. Previous high. Will it make a higher high? So I'm showing you this example from today because I'm about to show you what the market maker's master plan really is. It was to make a higher high from a previous day. Would you like to know what higher high it was going for in futures tonight? Why don't I show you? Specifically, 3.6, 3.6, 3.7 was the Jerome Powell drop. 3.9 was SVB, Silicon Valley Bank, and then everything just fell into place after that. 3.6 tonight was taken tonight. We just made a higher high, guys. Higher highs, higher highs, higher highs, higher highs. So now guess what the next trend is? As I say here, that was the goal all along. Too bad I didn't realize that till tonight. Till somebody on Twitter, one of the guys on Twitter said, "Yeah, it looks like futures is I can't remember the exact word. Catching a bid, I think that's what it was." So I just had a look. I said, "Man, you keep going up. What are you doing?" So then I just looked left and saw that. That's right. We keep making higher highs, higher highs, higher highs. Now it has permission to go down. After you take the higher high, now you can go down. Now you can go down for at least a couple days and still make a higher low and then resume up again. That was the plan all along. All along. And now you're looking at it. Five minutes earlier this evening, finally, on the 5-minute chart, bearish divergence on the MACD. I can compare those two humps. Why? Because this never went below the zero line. 293 versus 291 compared to a higher high up there. This was over an hour earlier. You have bearish divergence on the MACD. Are you ready to see what the hourly looks like? Well, why don't I show you? The hourly now is massive bearish divergence. Notice how this now, see, it came back up tonight to take out that 306 high. Now it has permission to curl back down and go down. Now, it remains to be seen what happens for the rest of the night. I have a feeling it's going to kind of keep it up there. Just kind of keep it flattish up here tonight. Keep it up here. But there's massive divergence. And come morning time, it's then going to curl down. And then it's going to make the downward journey. Because it has permission to now. Why does it have permission? Because it just made a higher high. It just eclipsed the 3-6 high. Now you have permission to go down. That's exactly like typical intraday trading patterns, guys. Only drawn out on a macro level. Okay, so now we have pretty big, massive bearish divergence on the hourly MACD that you're looking at right now. So, there you have it. Let's get into the intraday tweets. I only have a few of them. I kind of skipped some, you know. So, this is basically opening bell right here. Right there. I'll just call this right here. Yeah, right there. There is bearish divergence on the MACD, guys. Good chance this is going lower. And what I'm referring to, see, this is going up, obviously, right there. See that? That's going up. Problem is, MACD is going down. Okay? That's what I'm talking about. Good chance this is going lower. I was saying that right at opening bell. The bearish divergence is quite pronounced. But I'll see how this consolidates under the EMA 50 before getting puts. What I'm referring to is, once again, it failed EMA 50 right here. Here's EMA 50. Failed. Consolidate. Come back up. That's what I was talking about when I said I'll see how this consolidates. So, came down, took it, came back up. Okay? Okay, so here we go. Here we go. I want to see the backtest leg back up. See if it gets flatly rejected. What I'm talking about is this backtest leg back up right there. Right here. I wanted to see if it comes up and then gets rejected right there and then goes down. But, see, that's what happens. When you actually just be patient and you wait, it actually took it, consolidated on top of the line. Okay? So, yep, there you go. Starting to catch on to their tricks. Remember yesterday I said, hey, you know what, guys? I'm going to change my EMA backtest criteria. I'm no longer going to look at this failure point. I'm going to watch for the backtest leg back up and see what happens. Okay? So, okay. All right. This is the game the market maker's playing. The longer the 5-minute MACD stays under the zero line, this makes the 65-minute MACD curl down. What I'm talking about, okay, so here's the backtest leg back up. See that right there? But look at this. Here's the same MACD backtest leg back up, but the MACD could not pierce the zero line. And look what it does. Down, 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 down. But what happens is the longer the MACD stays below the zero line, here, right here, all morning, all half day, it stayed below the zero line. That causes the 65-minute MACD to curl down. I don't have a visual of that, but that's what it's doing, okay? So, yep, here we go. I'm talking about it right here, right there, right here. I'm saying the 5-minute MACD can no longer seems to pierce the zero line. Right here. This was right here at that time. Right there. 65-minute just curls down as a result. Okay? Okay, here we go. Let's see if I can zoom in so you can see this a little bit better. So, just watching for the 65-minute to continue curling down. So here, I do have the 65-minute right here. See that? See, it's curling down. See that? Yes, 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 yes. Curling down. And that's because the 5-minute can no longer pierce the 0 line and stay into the positive. That causes the 65-minute to start to curl down because the 5-minute is below the 0 line. Okay? So, okay, yeah. Okay, so that would have been like right around here. Yeah, right here when I sent that tweet. 5-minute MACD still can't pierce the 0 line. Once the 65-minute MACD does a negative cross, a negative cross example would be like, here's a negative cross right here. See that? The MACD line negative crosses the signal line and goes down. That's a negative cross right here. Example. Once the 65 MACD crosses, then it's curtains. Hasn't crossed yet, but it is curling down. Okay. New 65-minute candle just now opened. Let's see where this goes. I do suspect it's going down. That would have been like, oh, let's see, comes up like right here. Yes, right here when I sent that tweet. Yes, down we go. So, ultimately it failed the EMA 50 right here, come back up, got rejected from it, then went down. That's basically what happened. Okay, I started. Okay, see, yeah, this is the confirmation. This is the best time to get puts. At this point up here, you don't really know. Is it going to take off? What's it going to do? You see what I mean? I got puts right there. Or was it? Oh no, it was oh, sorry. It would have been 1, 2. Oh yeah, no, right here, right here. Yeah, right here. That's when you get puts, guys. Why? Because you've now failed EMA 50. EMA 50 is now resistance. That's confirmation. Now you have confirmation. Here, this backtest leg up. Oh no, no, you don't get puts. You don't get puts. You don't get puts on this down leg here because guess what? You just got reversed on. You get puts here. That's the best time to get puts when you have confirmation. I mean, you could have taken a chance. I know some of you guys got puts like up here, but man, you don't know what. Because like yesterday, well, you would have gotten reversed on. See what I mean? It's you gotta just, I guess, just depends on your risk tolerance and how aggressive you are. Sure, you could have gotten puts up here, sure. That's obviously more profitable than me getting puts down here. But as you can see, I still made pretty good profit, right? So just depends on your risk tolerance and your aggressiveness. So the last 65-minute candle just closed, and that's basically 11:49 a.m. Oh, that would have been noonish. Yeah, it was the negative cross on the 1 hour on the 65-minute is confirmed. It is confirmed. Show it right there. Right there. Negative cross. There you have it. Scaling more puts. Now the MACD negative cross is widening. That would have been at this moment right here when the new 65 candle opened, and whoop, down you go. So, okay, let's see. Let's have a look here. Okay, I'm talking about right here now. Yeah, watch it wick down from SMA 20 right here. There's your wick down. Now watch for the half channel rejection. Here's what I'm talking about is this dashed line right there. Yes, it did get rejected there. Went down even further. Okay. So look very closely what I'm talking about here. You cannot go back up and even touch the SMA 20 because the half channel is resistance. Let me zoom in what I'm talking about. Actually, you can kind of see it in that tweet already, but here's what I'm talking about. Here's the wick down from SMA 20. Here's the gray line. That's SMA 20. Notice this half channel is now resistance. This wick can't even touch SMA 20 anymore. It's getting rejected by the half channel right here. See that? Down, down, down. Okay? So it's important to know these levels. Then you can logically explain what's happening. Like, why did it do this wick from SMA 20? And now that doesn't even touch SMA 20 because that's hitting resistance at the half channel. Okay? So, okay. Do you see the MACD trying to make a higher low notch? What I was talking about is right here. Right here. It's trying to. I was talking about it right here. Right here. Right there, guys. Basically, what I'm saying is it's trying to bottom. When I say trying to make a higher low notch, that's code for it's trying to bottom. And I suspect, well, yeah, at the time that proved to not happen. I suspect it will eventually curl down to keep making lower lows. That did not happen. Soon as I saw that higher low notch start to curl up here, I said, ooh, I got out. I'm scalping out of puts for now. Then when it goes up to the SMA 20, if rejected there, I will scalp back into puts. So what I was talking about is I scalped out right here, got out of puts. I was talking about right here. If it gets rejected here and then goes down from the SMA 20, I'll get back in. But obviously, as we know, it didn't. So I never did get back into puts. Okay. Aha. This is the tweet I showed you at the beginning of the episode. This is the master plan that I later showed you. You made a higher high. You made a higher high here than the previous high here. This would be equivalent to March 6th high, and this was equivalent to today, March 30th. You made a higher high, guys. Anytime you do that, you're going higher. April is going higher. Okay, so this was just me still commenting. I don't have the pink. Oh, I have the pink line here, but not in this diagram here. So, you know, at the time, 403.49 pink line, this previous high was not taken yet at the time of this tweet. As we know, it was taken. So, my thesis is this could plummet down tomorrow, Friday. Let's see, check. I didn't even realize when I sent this tweet out, 3.6. I'm talking about 3.6 when I didn't realize yet that's what the market maker was going for all along. And it took it in futures tonight. Market maker rips it up like on 3.6 to drop it down, but make a higher low. That's what I think it's going to do. Eventually, the market maker is going to drop this down. It can come as early as tomorrow. Aha! I sent this, a couple hours ago. So, this is a partial screenshot. Check out 323, guys. This is the 1 hour chart for VIX. On 323, right here, this is a higher low than that. Okay? That's a higher low than that. Basically, it's bottomed temporarily. Look what happened after it made a higher low. Doop, surge up. We're back to that higher low today, guys. Today, higher low here after multiple days of falling. Consequently, it's kind of hard to see. You just have to take my word for it. Here's the MACD. Back on 323. Here's the MACD today. Same type of formation as back on 323. Only today's 1 hour MACD is higher than 323 when 323 surged. That's basically like bullish divergence, guys. That is lower than that. This is higher than that. So, we need to look out for tomorrow. Let's see what's going to happen. I think the VIX is positioning itself similar to what it did on 323. Yep. Okay, so that's all I've got. Feel free to follow me on Twitter where I'm giving real-time tweets intraday. Don't forget to listen to your favorite music as you're trading. Helps you get into the right state of mind, the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 signing off.